Good evening, ladies and gentlemen. The time is almost 3 o'clock. It is the 2nd of Feb. And after the budget first session today, we saw a gap up with a big destruction of premium right at the open. After the open, the VIX just continued to get crushed in IV. Weekly options IV continue to get crushed. First of all, it's a Wednesday. These options expire tomorrow. And on top of that, steady IV crush. So the first 1 hour gave excellent fall off in premium. And I entered a position of 17,400 put short and 18,000 call short. I got very good premiums on this. This entire order book is available on Telegram. You can check it out. So I got very good premiums on it. And then we had this situation around 10:30 where this very strong red candle was formed. And this was starting to look like potentially we might head back and fill this gap and whatnot. This forced me to square off my call, move it down to 17,900. I moved it at around 15, which immediately backfired because this turned out to be a false breakdown. And just as we were taking out the high of this candle, I moved my put option to 17,500. So at this point, my position was 17,500 put short and 17,900 call short. As we continued to trend higher, the logical stop loss at that point of time on the 17,900 call, which I had entered for quite a bad price around 15-16, was around 26, which was also the average traded price. So around here, about here, 26.5 was my stop loss, which just got grazed in this situation. So around 1150, no, not just grazed, it got taken out quite well. And I had to square off my call and move it to 17,950. The thing is, I'll continue to stay in the trade because it's a Wednesday. I still have a lot more to gain. So that made my position 17,500 put short and 17,950 call short. And that's the exact position that I trailed till almost till the end of the day. The reason I exited it was just as we started to form this candle here, and it looked like we would potentially close at the day's high. There has been huge writing of put options at the money and in the money, and a lot of people making this 17,800 straddle as well. What will happen is, if we head up over 17,800 just for a little bit also, there'll be a big gamma spike. These call options will very quickly put on 3, 4, 5 rupees. I didn't want to deal with that, which is why I exited it. I exited around 2:30. It's been half an hour since I exited. 2:34, 2:33, 34. That's where I exited. And from there, this position has not lost 1 rupee also. The idea is that I didn't stand to gain too much from staying in this position, which is why it was better for me to just take it off. So, and the risk of that gamma expansion is just unnecessary. And after having a good day, I didn't want to bother giving up any. So that was the idea there. And now everyone's gonna get a little bullish. A lot of bullishness would start triggering around 17,700, 750, and 17,800. If we take that out, a lot of these system positional people are there. They will start creating longs in the market. At this point, what I'm thinking of is on the other side, whichever of my stocks from my holding have run up, against them I'm selling far OTM call options so that I'll get some credit for it at least. In case the market really does make a push from here to all-time high levels, then also I'll not have too much problem with these call options. I will manage them accordingly. So that's more or less a summary. I got a question. I keep getting this question that, okay, when you say trailing stop loss, how does that work? Very simple. Whatever is my exit position, like for example 17,500 and 17,950. Let's say my currently both of them put together is worth about 20 rupees. If I have a trailing stop loss of 2 rupees, what it means that net between the two of them, if it goes to 22 rupees or I make a 2 rupees loss from where I am currently, then I'll exit. How do I exit? This is exactly how I exit. I make basket order with the strikes. I clone them and I place a limit order which is much higher than whatever the price is. This limit order will execute like a market. Just because I place limit buy at 26, it will not buy at 26, it will buy at 7.1 only, because there will be a lot of bids and asks in that space. And also in case there's a big move, I don't have to change this number. And also it limits the possibility of a freak trade because it's a limit order. So that's what I do to exit. To enter, I mean, I've covered this before, but I basically use console coder. And how this works is I now got a market protection order incorporated into this, which means it will underbid or over ask by 8% if I've set to 8%. So, for example, if it's a 10 rupees option and I want to sell it, it will actually place the order at 8% cheaper for 9.2. And if I want to buy it, it will place the order for 10.8. That way, it will still execute like a market order only, but it's a limit order which is placed 8% higher or lower. And yeah, that'll minimize slippage and it will completely eliminate the possibility of a freak order. But you don't need to do it that way. You can always just set a basket and do it. So yeah, why did I exit over here? The reason for exit, very simple, that gamma expansion. And yeah, I'm posting all the updates live on Twitter as and when I make some changes. And the order book is also there. So yeah, thank you for watching. This was a good day. And one more thing to just go over, people who have done short volatility strategies in the past 2 days have done extremely well. I think they should not get carried away by that. It just happened that yeah, volatility was implied volatility was huge, and the actual volatility that played out was almost nothing. So yeah, everyone has benefited from that by being short volatility. No matter what you do, any option you sold, you would have made money. And yeah, just know that the very similar situation could have played out in a different manner. And yeah, thank you so much for watching. I hope you had a good trading day, and I'll catch you tomorrow for the expiry. Take care. Bye bye.